So dear students, here we are trying to tackle the profit reconciliation between absorption costing and marginal costing. As I told you and warned you before, this is a subject, this is a calculation that a lot of students find difficult, but I think I have come out with a technique that will make it look really easy, because it's really easy. So let's start by reading this statement and try to see if you understand it from reading. If not, we'll move on to the illustration that I put together to make it clearer. So what it says is, if inventory levels increase between the beginning and end of a period, absorption costing will report the higher profit because some of the fixed production overhead incurred during the period will be carried forward in closing inventory, in brackets, which reduces cost of sales, to be set against sales revenue in the following period, instead of being written off in full against profit in the period concerned. I personally didn't understand, and the second statement is just the opposite of it. If inventory levels decrease, the opposite happens. So what should we do? What are we supposed to do? Are we supposed to fail the exam? No. So I put together this little bit of a demonstration in order to help you understand it in depth. So let's see. We have this small table, and I have variable cost, I have fixed cost, I have opening balance, production, sales during the period, closing balance. So what the statement says, that if inventory level increases from the start of the period to the end of the period, which means closing balance here is more than opening balance. So if closing balance is more than opening balance, then something happens. I just want to make it clear to you in different formats. So in what circumstances my closing balance would be higher than my opening balance? Let's imagine that my opening balance is 0. I produce 10 items, I sell 9 items, and at the end I have only 1 item left. 1 is more than 0, and closing balance in this case is more than opening balance. So let's try to see it from production and sale perspective. If my production is more than my sales, in other words, if I don't sell everything that I have produced during this period particularly, then my closing balance is going to be more than my opening balance. A little note, production here means the items that I have started and ended during this period. Items that are coming from opening balance, which means that I have started producing them in the previous period, but I finished them during this period. These don't count. So if my production is more than my sales, then my closing balance is more than my opening balance. So if you have it set, let's move on. So imagine that I have 10 items in the opening balance, and I start producing them. So I started them producing them actually in previous period, so I carry them forward and adding some variable cost, and then I will add fixed cost, as we will see. Then I have 40 items that I have started during this period. So I have started their production. Total, I have 50 items under production at the moment. So I'm adding variable cost to them. Now I'm adding some fixed cost to them. So what I have is now the sales stage. Let's say I have 50 items ready to sell, but I have sold only 35 items. Wow, what happens? I have produced 50, opening 10 plus what I've started and finished during the period 40. Altogether I have 50 items ready to sell, but I have sold only 35 items, and I have left 15 items in the closing balance. So if you remember, we had 10 items in the opening, now we have 15 items in the closing balance. And this is the case if our closing balance is more than our opening balance, etc., etc. And my production was 40 and my sales were 35. So So let's move on to see what we have as a snapshot. So I had 10 items in the opening, 15 items in the closing. I have started and finished 40 items during the period, but I have sold only 35 items. So the point is, if I'm talking about marginal costing, I do not care about fixed cost. Yeah, fixed cost, they go to profit or loss statement during the period. So they decrease my my profit during the period. Doesn't matter how much they are. Doesn't matter what I have started in the previous period, what I have closing. It doesn't really matter. Fixed cost is fixed cost, and I am going to expense my profit or loss statement by this amount, whatever it is. Yeah. Now, but in absorption costing, I do something else. What I do in absorption costing is fixed cost is absorbed to the items that I have produced. 10 items from opening balance, 40 items during the year. And out of this absorption, 35 items are sold, which means some portion of this fixed cost together with the sold items went to my profit or loss statement, and the remaining portion together with the remaining 15 items went to my balance sheet. So 15 items, these 15 items here, they go to the balance sheet as the closing inventory. So I show to my people that I have 15 items in the stock in the balance sheet, and these 15 items, they have variable cost and some part of fixed cost that were absorbed to these 50 items. Yeah. So in a nutshell, in marginal costing, I have all the fixed cost expense during the period, but in absorption costing, I do not have all of them in this scenario absorbed, not all of them expensed to the profit or loss statement. Yeah. So that is, I think, clear. And that means that in absorption costing, I have less cost in my profit or loss statement than marginal costing, if this scenario holds true. In that case, I have what? I have less profit in marginal costing than in absorption costing. Let's try to read the statement again. Try to see if that starts to make sense. If inventory levels increase between the beginning and end of a period, absorption costing will report the higher profit because some of the fixed production overhead incurred during the period will be carried forward in closing inventory. Yeah, to be set against sales revenue in the following period instead of being written off in full against. Okay, the second half of the sentence, this part not pay attention to. So the first part was what we aimed to explain, and I think it is more or less clear now than the first time we read this sentence. If not, drop me a message. I'll try to do my best to improve my explanation here.